Hello traders, Gary Wagner here. Just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Wednesday, August 14th, 2019, and this is the daily report for gold and silver. Nice showing for both gold and silver. Palladium and platinum trade lower, dollar gains, but the big news is a plunging Dow Jones Industrial Average. In fact, all of the three major indices closed off by about 3%. The Dow dropped a little bit over 800 points on the day. And typically when you have those big sell-offs, it firms a little bit on the close. This market closed on the lows. This is all in response to some genuine concerns about recent economic data suggesting a global economic slowdown. B, we have central banks all bidding for lower interest rates. The Fed is expected to cut interest rates. So we have currencies basically devaluing worldwide. And what we are seeing is a move into the safe haven asset class. Gold being a primary one, silver also being one, the dollar and the yen being strong contenders. Collectively, we saw nice moves in gold and silver. We did send out a trade alert this morning. We recommended buying gold, the December contract at 1524. We'll talk about that as we look at the price board, but more importantly, as we pull up our technical studies. Let's take a look at current pricing. Traders, as you can see, gold had a nice move to the upside. Currently bid at 1527.30. That is basis the most active December contract, putting it up about $13.20 on the day. I did attempt to buy on any kind of a dip that we could find. We found a very small dip at about 1524. I will show you how I came to that conclusion on some short-term charts when we look at our technical studies. But for right now, we are long at 1524 with the market at about 1527. Silver also gained, but had a sizable gain, 1.2%, 1719 after factoring in a 20-cent plus stay. That all with some headwinds from a stronger dollar. Dollar increasingly gaining strength, 97.82. It's up near those highs between 97 and 98. And also the yen did very, very well today, and that also gained. But when we look at the other precious metals, we had palladium falling out of bed, losing $33 at 1418.50, and we had platinum losing about 1.5% at 847.60. Traders, let's take a look at our technical studies and talk about our current trade. So, as you know, the other day we did pull profits over a 20% return, over $2,000 per COMEX contract. But at the same time, we left something out. We left some on the table. My sense is I am not losing money for my clients, my subscribers, when we leave money on the table, but we do lose money for our subscribers if we incorrectly get into a long position as the market is moving down or a short position as the market is moving up. My sentiment from the time we got stopped out until the time I put on today's trade did not change. I was bullish, but I realized that to protect equity, we have to use stops. It is a double-edged sword. I was looking at a couple of strategies in which we would hedge our long futures position with a put option in gold, but the premiums are quite pricey. So for right now, we're going to stick with that. I did want to spend a moment and talk to you about how I attempted to get us in on somewhat of a dip. Markets at 27, we're in at 24, and we're looking at short-term Japanese average chart, Heikin Ashi, because what that tells me and what information I can glean from this is effectively strength of trend. And as a market moves up, and this is what's most important, you typically don't have it moving up in a straight linear or parabolic line. Typically what you get is some sort of a stair step in which you have an increase, a percentage decline, an increase, a percentage decline, and an increase. Very much like we look at an Elliott wave, a 5 count, so to speak. So what I was looking at this morning is we traded to a high of 34.90, and that's this price right here, this candle here. Now at that point, we saw some weakness come into the market, and it took it back down to about 1523. The market then moved back up, And then on this downswing here, as we were getting nearer to the close and I saw this extreme low form, I realized that as soon as we saw any kind of a turnaround, that would be the best dip I'm going to get. I can't buy it on the way down because as a market technician, I've got to see that V. In other words, have the market come down and start moving up. We entered the trade right here at 1524 when the candles began to turn green. And in fact, we have a little bit of profits in there. I just want to get our subscribers in with a comfortable position where we're not taking much heat on the trade. It's not going against us too far. Now, in terms of the stop, we put the stop below 1500. So traders, we're looking at December futures. This is a daily chart, standard candlestick format. We also have our moving averages in. And what we want to glean from the moving averages is if they're moving further apart or moving closer together. What we can see is there's our shortest term 50-day. This is our interim 100-day. And this, of course, is our 200-day down here. They're in the proper order for perfect bullish market sentiment, meaning we're going from most days to second most days to shortest of the moving averages. That's defined. Secondly, we can absolutely see that we've got the 50-day and 100-day moving further apart. And that tells me the trend is actually strengthening. We also have a simple pattern called an engulfing bullish that was formed in which the body of today's action has completely engulfed yesterday's action. The fact is, though, it's coming after a defined uptrend and a slight consolidation. So it's not the key reversal. It's more of a continuation pattern. My sense is that we've got a real opportunity to see this market continue to track higher. And here's the thing. Currently, I've got a basic extension, 1.618% extension, and the extension is simply looking at one leg of the rally, taking it to that correction that followed, and then looking at where this leg could go. And we're looking at this as a third wave, which means that it will be typically the longest of any impulse wave. We can see what we're looking at for the first leg of the rally. We can really see also that the way that this market is played out is one of my favorite ways to see a market have a bullish ascent. And what I mean by that is we get a sizable rally and then we get consolidation, sideways trading action, even a little bit of a dip, and then we get another spurt as we got here. Yesterday we had some really wild swings. That was due to new information. That sent the market in wild gyrations. However, today, what we are witnessing is truly a safe haven asset play as the U.S. equities markets come under tremendous pressure and, most importantly, lose about 3%. That is a sizable move for a single-day move, one. And two, and most importantly, it takes a favorable market sentiment on gold as a safe haven asset. Traders, maintain your current long position, maintain your current stop. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.